Hey, if you're worried about the impact of tariffs on the U.S. economy, here's a quick take on some of the newly imposed tariffs. My name is Will Hubbard. I'm the founder and portfolio manager for Cirrus Capital. We're an investment firm focused on sophisticated, not complicated investment solutions. Trade policy is once again a major focus for markets, with the U.S. imposing new tariffs on Canada, Mexico, China, and the European Union, basically everyone. While tariffs can create short-term market volatility, history does show us that the long-term effects on financial markets are typically exaggerated. The U.S. does have a long history of trying to use tariffs for economic and political purposes, going all the way back to the Industrial Revolution. Protectionist policies have occasionally supported domestic industries, but they've also led to unintended consequences, such as the 1930 Smoot-Hawley Tariff Act, which worsened the Great Depression and made it take longer for us to recover. Over time, global trade policies have shifted more towards free market trade, but recent years we've seen a return to more conservative type protectionist measures. Currently, the U.S. does run a trade deficit, which I think we all know, meaning we import a lot more than we export, and some policymakers argue that reducing the deficit could boost domestic manufacturing and job growth, but others point out that it reflects strong consumer demand and economic resilience. Additionally, capital inflows from foreign investors help balance the deficit by supporting U.S. businesses and innovation. So despite concerns over the new tariffs, past market reactions really suggest that the actual economic impact might be less severe than feared. For example, trade tensions between 2018 and 2019 did not derail the stock market growth, as tariffs were used as a bargaining tool, which ultimately led to new trade agreements. Tariffs can also influence inflation in currency markets, with higher import costs leading to potential rising consumer prices. But a stronger U.S. dollar can offset some of that effect by making imports cheaper. So it's hard to tell which is which here. But the bottom line is that trade disputes often create uncertainty. Long-term investors can really stay focused on their financial goals and the fundamentals of sound investment principles rather than reacting to short-term market headlines. The key here is to staying disciplined in your investment approach and philosophy. Finally, just be aware that everything here is for informational purposes only and subject to change. Consult an advisor for recommendations or advice specific to you.